Welcome back. Forum Daily's weekly cryptocurrency and digital asset update with Catherine Murray, host of The Buck Stops Here, is up next. All yours, Catherine. Take it away.
Thanks, Nima. Hello, everyone, and welcome to your weekly crypto and digital asset update. I'm Catherine Murray. Well, the big story in crypto and digital assets continues to be the collapse of FTX, which, of course, was the $32 billion crypto exchange. It has caused absolute chaos within the digital asset world. The new CEO of FTX, in charge of liquidation, was also in charge of the liquidation of Enron. He has said that the bankruptcy of FTX is the worst case of corporate failure he has seen in more than 40 years. He goes on to say, and I quote, "Never has such a complete failure of corporate controls and such a complete absence of trustworthy financial information as he's seen." He goes on to say in a court filing that FTX and Sam Bankman-Fried's Alameda Research Trading Company had compromised systems integrity and also faulty regulatory oversight and a concentration of control in the hands of a very small group of inexperienced, unsophisticated, and potentially compromised individuals, and that the company used software to conceal the misuse of customer funds and gave special treatment to Alameda. Keep in mind, of course, as well, that what's taking many investors by shock and surprise is that FTX's founder, Sam Bankman-Fried, had the ability to raise billions of dollars from some of the smartest top-tier VC firms in the world, such as Sequoia, as well as SoftBank, among many others. Importantly as well, when we think about the fallout here, there are futures products within Bitcoin or cryptocurrencies. And of course, futures are a way to express your belief about future pricing and future value. Interestingly here, the futures price, the 1 month Bitcoin futures price, is trading at about a 3.6% discount to current spot prices. That is indicating severe negative sentiment within the space. If you actually annualize 3.6%, you get 43%. So again, signaling severe negative sentiment within cryptocurrencies. This, of course, reflects FTX's collapse, which was, prior to all of this, the third largest crypto exchange in the world. And the concern, of course, continues to be, will this prolong the crypto winter, which we've been experiencing for almost a year? And we'll have to wait and see how that plays out. Now, from a trading perspective, just as it relates to future prices versus spot prices, the difference that you're seeing in the disconnect is attracting a lot of arbitrage players. So you are actually seeing quite a bit of activity within that space. Now, as contagion spreads, one of the fallouts of crypto is the cryptocurrency lender BlockFi. We did talk a little bit about this last week. They apparently are preparing for bankruptcy, according to people familiar with the situation. And last week, we did note that they were halting withdrawals of customer deposits. BlockFi, it turns out, has been quite intertwined with bankrupt FTX. In a blog on Monday, they said that they had significant exposure to FTX and Alameda, including loans to Alameda and its assets at FTX. And as of 2021, BlockFi had apparently between $14 and $20 billion of customer deposits, had lent out about $7.5 billion. Again, that is according to people familiar with the situation. In terms of other people being impacted, other companies, recall the billionaire Winklevoss twins, made famous, of course, by their fight with Mark Zuckerberg in terms of who founded Facebook and who owned Facebook. Well, following Facebook, they actually moved on to be very, very successful within the cryptocurrency space. They created a company called Genesis, and they are apparently halting lending redemptions. This is as the withdrawals exceed the liquidity, but this is only with specific to that one product, not any of their other products, apparently. Of course, you might be asking, where are the regulations? That's what we've been talking about for quite some time. And there has been a number of lawmakers collectively calling for crypto control and to have some type of regulatory framework urgently needed, obviously. And Congressman Brad Sherman, in fact, said that a lack of regulatory clarity was a key reason why the situation that occurred at FTX was able to occur. Lastly here, stepping aside from all the FTX fallout, merchants who accept payments in stablecoin USDC can now interact with Apple Pay. Nima, I'll leave it there. Back to you.
All right, thanks for that, Catherine. Again, that was Catherine Murray, host of The Buck Stops Here, which airs on Sunday mornings at 9 a.m. Eastern. All right, stay with us. Forum Daily will be right back after a short break. Stay tuned.